Traders Lounge channel. I'm going to make this video as short as possible. I don't want to waste a lot of time on this. In this video, I want to teach one of the best scalping strategies that has helped me so much in this trading business. This is a synthetic indices volatility 10 index, and this is the 4 hours time frame, right? You can see the indicators I have in my chart. I have the EMA 50, EMA 100. EMA 50 is white, is the white color. EMA 100 is the one in red color. Okay. I have the stochastic oscillator to monitor the overbought and oversold region, right? Now, before we continue, I want you to subscribe to this channel and hit the notification button, right? Okay. So, like I said, I'm not going to waste a lot of time on this topic. Now, I use the top-down analysis to drive down to my point of entry. Okay, and remember, as a trader, you never go against the market trend, right? Now this is the 4 hours time frame. So I look for buys only because the market is in an uptrend. So I don't go for sales, right? Going for sales will put me at a very high risk, right? So these are the things I obey. You know, as a trader, you must be principled with your decisions. So the rules are simple, and they are what we already know in this trading business, right? Okay, so I've already marked the market trend. Okay, you can see the period indicators. This shows weeks. This is 1 week. This is 1 week. This is a period of 1 week. Period of 1 week. So I'm focusing on this current week. Okay, you can backtest at the end of this video. You can do the backtesting in other weeks, right? And remember one more thing: the lesser you trade, the better. Don't try to catch all the moves in the market. It is very risky. Okay, take only the ones you can and leave the market so you remain profitable. And remember, your risk management is another factor you do not joke with. Okay, your risk management, right? So this strategy gives reward risk to reward of 1:3 ratio. Okay, now as I have noted my market trend, I go down to 1 hour to note the market direction. Okay, I've seen the market direction. This is I've seen the market structure form within that trend. You can see the move, the 1, 2, 3 move, right? As long as this high has been broken. Okay, so I've noted the market structure from my 1 hour time frame. Now I'm going down to 5 minutes time frame where I make my entries. Now, how do I make these entries? What am I looking for? I'm looking for buys. And before I do that, I trace down to the beginning of, okay, the trend line. Remember, this point, this low and this low are the basics of my trend, right? So at this point, I am looking for buys, right? Because this is an uptrend. Now, whenever there is a reversal, I take note of the trend of that reversal, right? And how do I do that? How do I note this trend? Still the market structure formation. 1, 2, 3, right? As long as the low is broken, right? So to form a lower low, so I take the trend. So whenever I take this trend, whenever I draw this line, what next am I expecting? I'm looking for where price will break that trend. Okay, so at this point the trend has been broken, right? That's the second rule. The trend must be broken. The second rule. When the trend is broken, you allow price to break the EMA 50, which is the white EMA, okay, the one in white color. So at this point I'm expecting price to break the white the EMA 50, but it didn't break, right? I allow it. I don't enter. So at this point the market retraced and went back up to break EMA 50. Then at this point I've noted that EMA 100 is above EMA 50, so I don't make entries at that point. So I still wait until EMA 50 is above EMA 100. That is a sign of strong buys, the strong buys formation. So at that point, I have seen a reversal. That is when I will mark the high. After marking this high, now I am waiting for price. As it has pulled down, I am waiting for it to break this high and then never break it again on retracement. Never break below this high on retracement. You can see it broke it, came down. Look at this bearish candle. You can see this bearish candle. Let me zoom in. Let me zoom in for you to see. Right? So at this point I noted this high. The highest point. So price, after breaking EMA 50, watch the steps. After breaking EMA 50, it retraces. Then I mark the highest point of my price. Then under bullish move. Then I am now waiting for another retracement that will only tap into this zone but will not close within. You understand? After this bullish move, there's another bearish move. It closed even below the zone, so there is no entry. There's another bullish move breaking that same zone. Another bearish move that's closed above that zone. I don't enter at this point. What do I look for? I am looking for another bullish candle that will still close above the zone and never enter into the zone. If you have the wick of the candle inside the zone, there is no problem, as long as the body of the candle is not inside the zone. So at the close of this candle, I make my entry at the close here, right? I'm using these lines to make it clearer to my viewers. Okay, so at this point I take my buy position, right? Okay, so as at this point, so that's my entry point. Now I place my stop loss right below the last retracement. That is here. This is the last retracement. So if you watch this, you will see that the risk to reward is maintained 1:3. And the best thing about this strategy is you don't waste time at all. You don't waste time. You just go into the market, take whatever you can, and leave as soon as possible, as early as possible, right? So let me clear the screen and look for another entry. Okay, I usually take my entries at the break of the EMA 50, when my price breaks below EMA 50. Okay, this is another entry point, right? Right, this is the highest point, and this is a bearish move breaking the EMA 50. This is a bullish move. I take note of these 2 points, so I use them to note the trend, right? The trend, the reversal trend. Okay, so at the break of my trend line, I have a bullish move breaking the trend line, but closed below EMA 50. There is no entry. This is another reversal. I allow price to break the EMA 50. Okay, at the break of this, now I can easily take my entries here. This is my stop loss right below the last retracement, and you can see the risk to reward always maintained. I wanted to sell this course, but I can see there are lots of struggling traders, so I want them to take advantage of this and make themselves profitable in the market, right? So we can still look for another buys. Remember, whenever price is below EMA 50, never ever look for bullish positions, right? So, and at this point you can see that price has broken the major trend line, so there are no bullish entries anymore, right? So these are the 2 trades I can only take from this trend. This one right here and this one right here, right? The lesser the better. Don't complicate issues, right? I'm going to end this video here and allow you to do your own personal backtesting and see how you can refine this strategy better and make it your own. Thank you, and remember to subscribe and hit the notification button. Thank you. See you in the next video.